Hi, this is James Shug with Westpac London's end of day report for Friday, April the 5th. Well, it's a down day on equity markets today. Underlying it all has been concern about tensions or hostilities, potential hostilities around North Korea, with diplomats being asked by that government to leave the country. We had some disappointing news on the US economy too, with employment or payroll employment in the US rising to 88,000 in the month of March, well below expectations. Even though there were upward revisions to the January and February numbers, the quarter as a whole put on just an average monthly pace of 168,000 jobs. That's down from 209,000 in the previous quarter and 262,000 per month in the first quarter of last year. So even though the unemployment rate fell from 7.7% down to 7.6%, that's driven by a different survey, and that separate survey showed employment actually falling 206,000 in March, and the average monthly movement in jobs on that survey actually is a fall of 6,000 a month. So if you believe the lower unemployment rate and take that as a sign of the labour market improving, you've got to also accept that employment is declining in the US as well. The reason unemployment fell was simply that in the last 2 months, in fact, almost 600,000 people previously unemployed simply left the workforce altogether to go surfing or study or whatever. So basically what I'm saying is lower participation in the labour force, mainly by people who have given up looking for work, is pulling the unemployment rate down, even though employment is either declining on one survey or excuse me, or growing at a much slower pace on the industry payroll survey. Other detail on the report wasn't particularly flash. There were quite a few sectors or industries that actually reported job losses, including retail, factories, the government sector back in decline again, the finance sector as well. Whereas in the previous month, February, there was not a single industry that recorded a decline. Now, what I would say is that we don't trust these figures. As with a lot of the US data, the seasonal adjustment is distorted. The figures tend to show a hump or an improvement around the turn of the year, and then they tend to slump heading into the middle of the year. I've got to say, I didn't expect the slump to come quite so quickly. As with the ISM factory survey and the ISM non-manufacturing survey earlier this week, though, we've seen this deterioration occur in March. If you look at annual growth in employment on both the household survey and the payroll survey, it's just 0.9% over the past year, and that's not particularly impressive. Neither, in fact, is the 1.7% annual growth rate in the economy, given we've had many years now of pretty much zero interest rates and very accommodative policy from the Fed. So a real disappointment in the payrolls numbers in the US. The trade deficit narrowed in the US with exports up but imports flat. Canadian jobs were down sharply as well, 50-odd thousand decline there. In fact, for the first quarter, Canada recorded a job loss of 26,000. That's the first quarterly decline since 2011 in Canadian jobs. European retail sales, they actually fell 0.3% in February, partly reversing their January rise, but still down 1.4% over the year. And one positive note, German factory orders were up 2.3% in February. So that's the data flow today. The markets, as I say, are down. Losses have perhaps been mitigated a little bit in the last hour or so. We've got still another half an hour or so of trading ahead of us, but for the time being, we're looking at the London market down 1.5%, French market down the same amount, the Germans off 2% today, the Spanish market down 0.75%, and the Italians managed a 0.7% rise today. The Dow's down 0.75% at the moment at 14,496. In terms of commodity markets, we've got a mix of prices here, with oil off 1% at $92.40 a barrel, copper's unchanged, and gold, maybe a bit of safe haven status there, again, Korean tensions, up 0.9% at $1,566 an ounce. And the Aussie dollar, it's currently, just checking my chart, in fact I wonder if you can see it, there's the Aussie dollar over the last couple of days. Maybe that doesn't show, I'm not sure. So peak yesterday, just under 1.05, bottoming out at just under 1.036 an hour or so ago, and it's at 1.038 against the US dollar at the moment. All right, not a mention of Cyprus there at all, that's for a change, but I'm sure there will be plenty of Europe concerns to come back to fairly soon. That's it for today, that's it for this week. I'll be back again on Monday.